What about now? You guys hear me now? All right. That's the same thing that happened the other day. That's the same thing that happened the other day. All of a sudden, I'm glad I have two mics, right? But I'm using the body mics. Oh, good. You guys missed my little bit there on Italy at the end of the Second World War. But I was asking Guido. I was asking, yeah, what's up, everybody? There y'all are. Oh, nice. So, okay, I'm also this is my first day simulcasting. So I figured out I can do a simulcast over to X. So I see we got some folks over on the X side of things. So what's up, everybody? Over on X. Yeah. Oh, weird. Okay. Oh man, people are really coming in here now while we're doing the simulcasting. What is up, everybody? What is up? Scoobert Dubert, I see you're over on X. We got David in the house. What's up, David? Guido's here. Kurt is here. Not Medical Advice is here. Oh, what's up? We got the whole crew in here. Archangel is new. What's up, Archangel? Welcome to the crew. Everybody say welcome to Archangel. Archangel's new. Say hello. What's up, my guy? Great you're here. Great to have you with us. Yeah. Eurocrowd, we might not have Eurocrowd. Some of Eurocrowd, right? So I wanted to wait. No, it's pretty late. It's like 4 a.m. It's like 3 a.m. and 4 a.m. in Europe. So maybe Eurocrowd gets on the tail end of things. Like I said, right? One more week or so, right? We're gonna do today, and the next Fridays we're gonna be still in Thailand, and then the next couple weeks gonna be coming at you from the East Coast, and then we'll be back in EU land. So we'll get back on that. But y'all wanna wait? You guys want to see? Show you guys my view here. I'll flip this around and then I'll get the camera back. But oh, I'm living in a little box, but you know, we got a nice little view. You know, there's Mrs. Mojo. She's enjoying her breakfast. You know, got her headphones in, totally oblivious. Yeah, but that's okay. We love her anyway. Wait, let me deselect this. It's a little light. Doesn't look too bad. Anywho. Yeah, so yeah, we are in Thailand. Good question. Why am I in Thailand? So my fiance makes content, right? So she has a business. She has a couple Instagram profiles. She works for the Polish and Ukrainian market. She is actually Ukrainian and a Polish citizen. She makes courses. So she's a teacher like I am. We're both trying to, understand how to teach people better and more effectively and stuff online, right? Like, my whole purpose in life is to help people understand the world better, and that's what gives me meaning, and hopefully in useful ways that reduces net suffering. That's my aim, right? If I can spend my life helping people understand the world better in a way that reduces our net unnecessary suffering, I should prioritize unnecessary suffering. Then that's a life well lived for me. So she is also a teacher, and she also works at reducing people's net suffering, unnecessary suffering. So she works on she teaches fitness and health and wellness and things like that. So like stretching and like nervous system reset type stuff. So how you can balance. You spend all day looking at your computer, like what are drills you can do to like kind of rebalance your nervous system after staring at screens all day. So she does a lot of stuff like this, and she builds courses online. So she does online courses, and she works primarily. So her first market is the Polish market. She's expanding into the Ukrainian market, which is her home market now. And it turns out that like the number one, like whatever you do on Instagram, if you're marketing primarily to women, because most of her audience is women, In fact, like just like it turned out that 99% of my audience, or I guess it's 90, no, not 99, 96 per my percent of my YouTube audience is men. Hers is even more so. I think it's 98% women. So it turns out if you what works as the best advertisement is doing everything she would normally do, but then in like a warm tropical country. So we came out here to film a bunch of content for her and scenes and stuff for her Instagram pages, for her courses, and yeah, that was a success. So doubled her doubled the people who enrolled in her recent course. So we came out here for that. So it's like we keep trying to hack the like let's get a marketologist and a targetologist or whatever, all these positions, and they're like, we should try this, and we have to press their pains, and we have to do this, and then it's just like, what if we go to a beach in Thailand? And for some reason that's what works best. So we're here for a bit, and then I'm going to be and then I'll be on my way back to the West to a bit for a little bit. So I am not. Somebody asked me if I was in Bangkok. No, we're on. So actually, very interestingly, we are on an island called Koh Lanta. There's actually a really cool. So where I've actually been doing most of my stuff from is this little co-working community called Cohub. It's pretty cool. I would recommend it. Right, you just get, it's just like this kind of secluded spot, like out in the jungle, right? And you just like look out, and there's like trees and like a little garden, and you can like go on like the app and just be like, I want a banana smoothie, and they'll do it. And then they've just got like outlets everywhere, outside, inside, air conditioning, no air conditioning, sun, no sun, whatever you want. And you can just sit there and do that instead of being in like a dark office and stuff. So it's pretty cool. Recommend it. What's up, fan I am 503? What's up, dog? Great to see you. Welcome. Very happy you're here. Yeah, man, we got a lot of people in here too. Yeah, guys, I was in that prison. I was in that what looked like a prison cell for a little bit. So I thought, you know what? Let's get some sun. We got the nice view. Give the people what they want, right? Give the people what they want. Very nice to see it. The scuba duber. There are indeed hammocks. Yeah. Very cool. What's up, Ken? Ken's here, everybody. Shout out to Ken. By the way, this is the Ken Wedmerland, who is so gracious that I do my monthly shout outs to. So Ken started supporting the channel on a monthly basis just this past month. So be sure, if you have a chance, go ahead and give a big thanks to Ken out there. Family man, trying to make it as a full-time trader out there all the way in Denmark. So cheers, Ken. Cheers from all of us. Oh boy. What's up, Brad Bob? Yeah, man. Right. That's always remember. This is what I always remember, guys. I try to remember it. Like I talk about this with Mrs. Mojo all the time, right? Especially because she's Ukrainian, so she's like she gets like full blast of a lot of this stuff from like Ukrainian influencers, just like going nuts about like anything that comes out of American media. They just all take at face value, right? I love, one of the reasons that I actually, right, that I fell in love with her and that I fell in love with Slavic culture in general, right? And that includes, I studied my PhD. I studied the Renaissance in Eastern Europe. So I studied, history of the Polish-Lithuanian Commonwealth and what was Ukraine. So the Rus as well. So that includes modern Ukraine, Belarus, Russia. So I studied a lot of that. And I fell in love with Slavic culture in part because there is a commitment in these cultures to, especially historically, to directness, to sincerity, to honesty. It's hard, right? It's hard living up there in Northern Europe. Like in the past, try being a farmer in like where it freaking snows like 7 months out of the year, right? It's very difficult. So Slavic culture is very direct. It's very at face value. And like I when I started spending time around Slavs and living in Eastern Europe and such, it was actually refreshing that like people took you at face value and then like expected you to keep your word on things. Like you didn't need to allude to things. It's just like, what do you want? Say it, and then I'll just tell you if I can give it to you. So I really appreciated that. But one of the things too that Mrs. Mojo gets all the time, right, is of course Ukrainian influencers, Ukrainian media, all that type of stuff is very like, it's a people that takes things at face value. So they see, you know, the American media empire, right, has its sights set on Ukraine and Eastern Europe over these past few years, and it can be very difficult for them to be like, wait a second, wait, they might be lying about this, right? Like this is not necessarily something at face value. This is theater, and the real stuff happens, you know, behind the scenes, something like that, right? So very interesting to see that. So hope, yeah, we'll take our minds off some of the theater out there today. We'll take a look at some of our GameStop stuff. We got some cool things to look at. Oh, interesting. What's up, man? Oh, I've been to Koh Lanta. There actually are some really good vegetarian restaurants here. Oh, what was the other one? There was some bakery. It's like Auntie Annie's Bakery or something. Really good. Like whole. If you like vegetarian breakfast, they had a whole like vegetarian breakfast spread. Very good. Yeah. Cheers, Ken. I'll have to tell that to my Polish friends. I did not know that stat. Yep. But good questions, right? Saggy Salamander, cutting right to the point here. When will GME be aggroing upward? This is a great question, right? And so I want to make sure, because some of this got spread over a couple videos this week, right? I want to make sure that we do spend a little bit of time on this topic, just so I can make my meaning pretty clear here and kind of piece together what I've been seeing and what I understand is going on, right, with our recent price action. So I want to revisit this point. I did get some of it in my earlier video, but I want to, you know, walk through this and also give you, because it's a more complicated topic, I also want to give you guys a chance to kind of talk through some of this. So actually, let's bop on over to some of the charts that I marked up earlier today. And yeah, I want to break down this analogy, sort of what I talked about in terms of what internalization of these trades actually looks like. So let's hop over to, yeah, right here. So one of the things, right, that I try to do on a regular basis is I try to, you know, I have said this. I said this, you know, back on my Reddit channel. A lot of people maybe who are tuning in today maybe were not along for the Reddit ride before my account got banned. Maybe some of you don't know that my account got banned from Reddit. I pretty much only posted to Superstonk. I only would basically do my write-up and then post that and then kind of comment on it, stuff like that. Never had any issues with the mods over on Superstonk. But conspicuously, I did have some of my posts would just randomly go down. Like they would just get banned like as soon as the market opened on certain days. And on a number of those days, we had some conspicuous price. Like I had one where I was like, oh, there's going to be a bull trap today. This is bull trap. And in the title, I was like, watch out for a bull trap. And then like within 10 minutes of that getting posted, it just got banned. And then the whole day was a bull trap, just like right off the open. Made me kind of suspicious. That happened maybe 3-ish times. You know, my post got banned on December 2nd. So basically after Thanksgiving, right, this was this move here, right? So I had 1129 was our first kind of leg down in this post-Thanksgiving move to engineer the price. And then we got a second really big leg down through direct shorting on December 2nd. And my post this day was banned. And basically on this post, I said, like, here's what I think is the case. I said, okay, so there definitely are the shares. And you can go look back. This post, I was able to back this post up. It is an article on Twitter if you want to go check it out again. What I had said this day was, okay, so this looks like it got super heavily shorted on Friday. It can be shorted again. They can do this. But if they do this, it looks like they're doing this through direct shorting. If they exhaust their direct shorting, and the price drops below 27, they're actually going to expose themselves to have this reverse back to the upside pretty hard. Like somebody could come in and then basically, squeeze them in or trap some of them in this short position, which would not be great, right? If it gets pushed through $27. And that's what happened. And then it hung out kind of above 27 for a bit. And then it looked like that Thursday on the 5th, they tried to push it and they successfully pushed it below 27. But then Roaring Kitty, time you cover tweet, it exploded up, went nuts. And that's actually the same day that my account got banned. Nothing from the mods. The mods actually on Superstonk had invited me to become a mod for Superstonk. And I was like talking to them and I was like, okay, what would this involve, right? Filling out an application and stuff like that. And then just blanket account banned, tried to appeal it, asked what it was about, locked out of the account, could not log in after maybe 12 hours. And then just nothing from Reddit. Absolutely nothing. Account gone. That's it. It's like still frozen out there somewhere. So apparently people can like still go historically and like find the tag and like click what they know to be like deleted posts from my name or something, or deleted comments if they know that that's what that is, if they responded to it. But I have no access to any of my stuff. So why I mention this is what I was doing at the time was actually trying to understand, like, okay, how can we use these mechanics in order to, how can we understand this price action? How can we understand, say, classical technical analysis? How can we use options analysis to forwardly predict what's going to happen with the price? With the exception of that one event around the time that I got banned, and I mentioned this in my videos earlier in the week, and a bit last week too, right? This was very predictable, right? This behaved according to technical analysis. So a lot of this price action was very organic. Okay, so why do I say that, right? What does technical analysis actually do? Technical analysis, right, it's not causal in the sense that people might think it is causal, right? It's not, oh, okay, the price hit this price level and then that caused the price to go down because of some kind of market mechanic. No, not necessarily, right? What technical analysis does is technical analysis maps the flow of pricing and demonstrates at the same time what is or is not statistically probable, something like that. And you can visualize this, and these visualizations act as navigational markers for determining what is statistically probable and what is not. So when traders are looking at this and they're trying to base their decisions on technical analysis, they're basing these decisions on statistical probabilities as they are visually represented as this navigational apparatus. That's a little complicated, but your brain just kind of processes that automatically, right? And so you can make inferences about organic decisions in the market based off of this stuff. Now, if major events come up, those major events, why we think about catalysts, why we think about news events, things like that, is these catalysts can disrupt that flow because they inject new information. Traders use these as to measure these statistical probabilities based on sort of a closed flow of information. So you have a certain amount of information, you have a certain amount of orientations towards that information, and by potential buyers or potential sellers, and then trading behavior emerges organically from that set information space. When you get new information, that information space changes, and it changes the way that those decisions happen so that they organically reconfigure themselves into another pattern or another trend. And that's sort of what defines trends and subtrends. And they kind of stack on top of each other, but that's a bit of a digression if we go down that path. What occurs, however, in GameStop, and I have been trying, as well as a number of others, right, to try to understand what's going on here in GameStop, has been what's going on with these circled events. Okay, so these circled events do not emerge under any news. There's no obvious catalyst that brings these about. They just happen. They just appear on the tape, right? Just sell volume materializes consistently, and when you zoom out, right, you can see, okay, in these sequences, like, do we have selling? Yes, there are sharp sales that can come, immediately after something like a sharp rise, something like that. But the price in these instances, especially what we've seen in this bear trend, this bear trend that we've looked at, is the price just materializes down. It just teleports down, or I've called this transposition, right? So looking at this, I immediately was like, this kind of looks like a musical staff, right? So if you were to take these notes, as I outlined in my video yesterday, I gave you guys an example. If you were to take these notes, right, these notes have a rhythmic sequence, they have time values, they have quantities, lengths, right? You can arrange them on a staff, and their positions are the same. But if you move them down from a treble clef to a bass clef, you transpose the pitches down by a fifth. But the notes themselves will all look the same, right? They'll have the same lengths, they'll have the same quantities, right? They'll all line up in their right spot in these bar staves, these bar lines, and in the stave staff itself. But the pitches will move down. So that's more or less what this looked like to me in terms of seeing what is organic and what is not. And what seems to be inordinately driving the macro shape on this kind of trend is not so much organic selling. It's not, people lose faith in the stock and they decide, this isn't worth my investment anymore. Let me divest myself of my shares. This is sell volume emerges basically out of nowhere, and we just get organic price action transposed down, $3. Each of these is about $3, I think. Yeah, just about. So what a number of users have been pointing to, I suppose, let me sort of stop there and take a look at the comments, make sure everybody's with us here. Yeah, exactly, David. Yeah, dog. Got lucky, yeah. Goatee battle with Gherkin. Gherkin doesn't like me, dog. I don't know. I wanted to learn from him because, like, that guy knows a lot of stuff. Like, much respect. He did a ton of work. I've learned so much from that guy. His early posts back in 21, some of his stuff in 22, 23, really great. I, can't speak highly enough of a lot of stuff he's written, but I wanted to ask him questions. I wanted to talk to this guy, and he banned me from his Discord. So no goatee battle. No beef, but he just doesn't want to talk. I think he doesn't want to talk about GameStop. He's done with GameStop. I don't know what exactly the nature of his relationship was with Super Stonk, but that dog's done with GameStop. He doesn't want to do that anymore. But in any case, yeah. So back to Saggy's question here, right? Right. What is really contributing to how can we tell, right? How can we detect when GameStop is going to have these major movements upward? What really causes these? What really causes, what we saw, for example, on what is this? This is February 13th. What really brings that about? How can we forwardly predict that? Is that something we can forwardly predict? It seems like it's something that Roaring Kitty can forwardly predict, unless we believe that everything that has happened with GME is as, let's say, a lot of the mainstream media narratives want to convey, that this is Roaring Kitty engineering this, that this is one dude sitting in his house in Massachusetts with his wife and daughter, and is like wearing wearing headbands and sunglasses and drinking beer from his local brewery, and is just like, I'm going to just make people spend tens of billions of dollars to control the price on this stock, like from my little terminal here, from my laptop, right? If you believe that, then like, okay, go ahead, trade with that if you like. Then you're kind of pinned to whenever Roaring Kitty is going to post his posts. But we've also seen that, right, he can post stuff and it not actually cause these types of reactions. So for example, otherwise category 42 has done some really great work on sketching out what he has called boofing, which is some of the forms, right, actually how settlement works and how to try to predict when we see some sort of, right, you have an internalization event, and then that internalization event ends up getting de-internalized some number of periods later. So this is roughly, if you've seen this, the T plus 35 concept. Now, the problem with T plus 35 is it sort of differs depending on how the trade is being internalized. Options are different from equities, are different from, I guess, things that also have to do with swaps, which is the real kind of black box, right? Is also different from order flow rerouting. Like all of this stuff, you can strategically FTD through ETFs and cause this kind of, what otherwise category calls a boofing window, this kind of settlement window, but it doesn't necessarily, depending on what is being internalized, get delivered around the same time. So how can we predict these? Well, at least we can say, right, what I think is when we see something like this, you go out to the 4-hour chart, when you see something like this, if you see something like back in, what was this? Yeah, back in December, end of November, end of December. This was not, I think, something that was internalized. This was coordinated, very heavy, but this was direct shorting that was not necessarily internalized. These may have been internalized, but shares of GameStop were directly borrowed from the lending pool and then used to move the price down, right? We saw shares available to borrow go down from like 2.3 million, basically down to 1 million. I think some of those shares were internalized. I think some of them. And I think part of this price action that we saw here in later December was from attempts to de-internalize those shares. And we also saw that shares available to borrow, basically up to the spike here, up to when we moved to 35, well, I guess it was 34.40. This is the first of the 69-cent mystery share buyer. Available shares to borrow on GameStop, like directly available, got down to 50,000, which is crazy low. And XRT was on Reg Show, on the Reg Show threshold securities list. So they ran out, like GameStop ran out of shares basically around like January 6th through the 8th, that particular week. Shares available to borrow to directly short GameStop were not available. Those had dried up. And then basically heading into the Jimmy Carter day of mourning, they started to go up again, even though GameStop's price was going down. And then they really moved up between the 10th and the 13th. And then on the 14th, the price really, really shot down. So a lot of what was in here was direct shorting, some internalization, but not primarily internalization. What's been really interesting about these moves, these three here, is GameStop's price has been moving down, but the shares available to borrow on GameStop have not budged. So what is occurring, it seems, on these orders is that however institutions are using their tools to adjust the price of GameStop, to engineer this price action, these are primarily through channels that can be internalized. So these are not being done directly with shares of GameStop itself. The lending pool has not budged. It's a couple 100,000 shares, right? Or we see some settlement, a few 100,000 shares are used overnight. But by pre-market, it's basically back up to the 2.93 million area. So what looks to be the case, I'm not sure exactly what occurred here, but one of the things that now a user, I forget this user over on Reddit, kind of pointed this out a bit over on Superstonk. I think the title of the post was "What's in the Box." I can try and find that, but I think it's "What's in the Box." But pointed out, and I don't know, this particular user had a theory that perhaps there's a 3.5-year box. I mean, GameStop does look to have entered into one of these boxes all the way back from '08 to 2012. Like a huge internalization that may line up with what Always Sad But Truthful has been saying about GameStop and swaps, that GameStop was mixed up with the mortgage-backed security swaps from 2008. We can get into that in a sec. But that basically there's this kind of like Oklahoma pattern. And this Oklahoma pattern, as I guess I'll call it, you can call it a box if you want, but it looks a lot like Oklahoma to me. You can be the judge here, right? Kind of looks like Oklahoma. Little Oklahoma panhandle, something like that. This one kind of looks more like Iowa. Hawkeye folks out there, you can let me know if you think it looks more like Iowa than Oklahoma. But the little Oklahoma pattern, what I think this is this represents internalization and de-internalization. This is actually a full frame internalization and de-internalization window. So what you see is you see some like short stock gets shorted using elements, elements that have to make use of strategic fails to deliver. And then those strategic fails to deliver, the trade gets internalized. And then something occurs down the road. I mean, a standard window is at T plus 35. It's T plus 35 of its settlement. It's T plus 29 if it's a Rec 68 margin deferral extension. It may be something like that, right? I think that the more explosive ones tend to be where they kind of immediately come up is something gets internalized, right? So it's like, if we look, for example, at this element back here, right? We have this recent one, but we also have this kind of cauldron, this Oklahoma pattern after GameStop earnings last year. Last year, GameStop earnings were good. GameStop beat expectations. The analysts said that GameStop was going to have another year of a loss, and GameStop was profitable on the year. That was not expected. That was perhaps, well, okay, maybe people in the community who have been following GameStop and believe in the company and aren't blinded by mainstream media narratives, super stonk crew like may have been open to that idea or hinting at that. In fact, some people were, right, with their earnings projections, but the company was profitable. That was not the Wall Street consensus, right? And think about this too. Like, part of the danger about living inside and working inside one of this giant, monstrosity of an apparatus that just feeds its own propaganda, not only to people but into itself, is the way that many of these people, like Wall Street analysts, journalists, whatever, is a lot of them actually get to the point where they repeat this stuff so often that they actually convince themselves of their own narratives. Part of these people believe, and I've talked about this in the past, right? They believe that speech makes the world. Narratives make the world. Narratives actually define knowledge. It's a postmodern view of, or a view, it's not necessarily just postmodern, but one that postmodernism has adapted and adopted, that narratives define what is and what is not knowledge. If you control the narrative, then you actually have power over what is true. Yeah, very Luciferian. But the idea there is a lot of these people get convinced that, within the Wall Street machine, they get convinced of their own propaganda. And so a lot of people taken by surprise by this. And so what looks to have been the case, probably on this little bump up, is somebody big was probably in danger of getting liquidated, something like that, or was not prepared basically for that strain on their margin for GameStop to shoot up from, say, $15 to 20 something dollars. And it probably was going to go up to 20 something dollars. And somebody big internalized this trade, right? So it started to go up and they said, nope, short it, internalize the trade, send it somewhere, right? Because they knew they were going to get margin called, and maybe they did get margin called already. So then file for a Rec 68 margin call extension and deferral, and then allow the price to go down, 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 down. During this window, you can now basically prep your positions. You can adjust whatever else is going on. And now keep in mind, right, the broader market went into a dip at this point. You can adjust your portfolio, you can adjust your position so that when you actually have to deliver on this margin, you don't get blown up, right? And that's, for example, that's what happened with the bad case. The blow up case is what happened with Bill Huang and Archegos. Archegos lost on a number of bets that some swaps involved GME in 2021, and Archegos could not get out of the situation they had put themselves in. Over leverage, could not reconfigure their positions, and so when margin call came, they just blew up, right? The entire portfolio blew up, fund gone, all those billions gone, and then took out like Credit Suisse, right? Took out their counterparties. So this was probably someone was trying to avoid that. And then the margin call deferral, the extension came due. And then where did it go? It popped right back up, basically to where it was shorted down from. This is the key. If we look at where we started to be shorted very recently, back in, what would you say? This is on January 14th. Our price basically went all the way back to where it was. Our high on the day here was 31.68 on January 14th, when GameStop started to get shorted into this recent downward cycle. Okay. The high of that pre-market candle back on February 13th, which is not quite 29 days later, but with one calendar exemption, Martin Luther King Day, it's 29 or 30 days. It went back, it's 31.66. So within 2 cents. Within 2 cents. So these Oklahoma patterns, I think when we see these boxes are margin deferral followed by margin getting called. And then whether something happens after it is whether someone anticipates that to be the case. If they think, okay, this is going to be internalized, then internalized again. Whatever happened here in early May was this came back on the tape, but then it couldn't be controlled back down. And that's when, Roaring Kitty struck. He probably had quite a lot of options there, maybe a lot of shares, and then this really took off. And then he revealed his position again and something like this. So I think he might have seen that line up with something like a swap that lined up with that margin call. And it just kind of created something of a perfect storm. Now, maybe he had some kind of inclination that this had like to do with, a 3.5 year window or something like that. If he knew that there was a bigger term swap that was coming due, then could be the case. I'm not sure. I won't speculate too much on that. I am not the swaps expert. But I think this same type of pattern is exactly what we saw here play out between January 14th and February 13th. So somebody, I think, was potentially, somebody may have been margin called here and then said, whoop, we're going to internalize this, and then just let all that back up onto the tape. Yeah. So what does that mean for us going forward? Well, if we look at here, we know we've got 1, 2 of these. It's very interesting that this one occurred on a day that Roaring Kitty modified the metadata of one of his videos. So on the 24th, we got this big move down, and Roaring Kitty modified the metadata of one of his live streams there. I think he probably modified the thumbnail of one of his videos. It's the one on December 23rd. So the live stream, I went back and watched the live stream, and it's when GameStop cracked $23. It was Kitty's second stream that week, and it was basically to celebrate that, like, that was the first phase of what they had been looking at had basically been crossed, like that threshold had been crossed. Ryan Cohen believed that there was still more upside in the company. We're something like 8 or 9x the valuation of the company at this point versus then, right? So that was when GameStop cracked $1.5 billion valuation, and now we're at like 11 billion for a valuation. So pretty cool. Maybe there's some kind of a signal there about what's to come, but my point here is these internalizations, these look to be the same type of moves as this. These internalizations don't look like they've been realized yet. These don't look like they've come back onto the tape. Maybe they have. Right? What was going on here? This looked like this was something swap related. Don't know what was going on here. Don't know what was going on here. But what does seem to be the case is that, and I talked about this in my earlier video, but it does look like, GameStop's got a very exciting earnings coming up. Like I talked about this, with respect to PSA, and we'll get to that in a sec. But I would say that currently it's not necessarily within I will say it's not within my power to say, oh, this trade is going to get coughed up back onto the tape on this day, or it's going to get coughed up back onto the tape on this day. What has been strange, as I would say, is back in September, October, August, even end of August, we did see some of this stuff happen, but it was institutions let it happen on the lit market. They let this stuff happen during normal trading hours. And if you recall, like, we were able to call that out. We were able to see when the strong opportunities for something like that was going to happen. When we had like something like a gamma ramp, a very sensitive gamma ramp could be exploited intraday for pretty big options returns. So the 29th and the 30th, we had one of those. September 6th, we had one of those. September 20th, we had one of those. October 25th, we had a small one of those, but we had one. What was very interesting to me about the fall is that institutions were fine letting this stuff get coughed up onto the lit market and then using that as an opportunity to profit from options bets. But they're not doing that now, which is strange. It's happening all after hours, pre-market, overnight stuff. It's very strange. And even if we look at our price action today, or over the past couple days, right? So let's head over here. So this little thing here, right after hours, this, right, heading into the close, minutes into the close, all of a sudden, we just ripped almost $1 into the close. So that it hit right at the max pain point, which was 25. So we closed at 25.04. So those contracts are basically worthless. But then it ripped to 24 into the after hours, or excuse me, 25.40, 25.41 into the after hours. What was that? What was going on there? Or pre-market yesterday in a second, right? In less than a second. You can watch the replay. It happens in a second, right? The price ripped from 24, again, like 24.92 to 26.20 pre-market, and in less than a second got shot back down to like 25.30, 25.40, something like that. What was going on there? Is that the whoever has to de-internalize this stuff kind of breaking it up a little bit? All right, let it out a little bit on the pre-market here. Let a little bit out on the after hours market there, right? Why are they avoiding doing this during the lit market? Why are we seeing 98 and 99% of our options, of our call options out of the money? It may be that the situation right now is particularly sensitive. We do have this very strong IV appreciation effect. It could be that they are trying to, whoever is making this stuff happen is trying to avoid doing this on the lit market because of how sensitive our options market is, our trading landscape is, how market makers, options market makers would hedge that activity, how it would draw in frenzied retail or trading, pro trading, prop trading activity, options trading activity, and that might cause some loss of control in the price. That they're perhaps trying to push this as close to earnings as possible. I'm not sure, but things are definitely different this time around, I would say, versus what we were seeing in the fall. So let me pause there for a sec. Let's take a look at some of the comments. Oh, interesting. Rash Dude Man. Curious to hear your thoughts on a significant spike in volume on 620, 125Cs. Had nearly 16,000 volume yesterday and similar increase in OI. That's a good question. So the 125s are way out of the money. They are primarily, so they're, I mean, how much value is even in these? Let's go take a peek. Let's head on over to unusual whales. That's a good question. So what would I think about this trade? This would be, let's see, you said June 20th. So let's take a peek, everybody. There we go. OI, 58,000, 56,000, excuse me. That's pretty big. Mostly at the bid. Most of the volume is at the bid. I didn't see, it doesn't look like there was anything yesterday. Not a lot of stuff yesterday. If we bump these out, let's check it out. That was a pretty big spike, huh? On the 27th. Well, they did really significantly go up in value. So this occurred 10:30. Oh, that's pretty weird. So if we look at the price, I mean, they went up. They went up 50%. So they had a 50% spike in value. It's hard to determine if that's because somebody bought them at this price. That's a big, yeah, that's big volume. 4,200 at the ask, 3,000 at the bid. So looks like these were kind of pumped up and then sold really quickly on a price spike here. So these are going to be, because these are so far out of the money, these are wildly sensitive to changes in implied volatility. So any kind of price action is going to make those spike really quickly, and then as it slows down, it's going to shoot back down. So those are very difficult to trade. I'd really recommend anyone looking at those exercise caution. Yeah, you can see that the IV on those contracts specifically is 160%. They're very sensitive to changes in IV, or I should say the delta values of those contracts. The Vanna effect on those contracts is very profound. So when local IV spikes, it's going to have a disproportionately large amplificatory effect on the 125s. And so delta will change, right? The percent change in delta on those contracts is going to be very large. And that's going to have a very profound effect on the pricing of those contracts. So sometimes you'll see something like, I traded these a couple times just to sometimes I'll trade something just to experiment with it. Like I'm not a very, very small amount of money. It's like, okay, I'm not going to set this up as a bread and butter. I will, part of the way I understand, right? If you want to have a fuller understanding of an instrument, you have to use it apprehensively. Apprehensively in the sense of apprehend. Like you have to actually use it to try to achieve some goal. So if you want to understand how the 125s are behaving well, like, yeah, watch it. You can watch it, but try to trade it a couple times. Like understand the dynamics of how to win, how to lose. Like how can you make money with this? Like when are the opportunities that you can and can't? So I did that a little bit with very small sums of money. And yeah, like a little 10%, 5%, 10%. I mean, that's a pretty big intraday shift, but a little 5%, 10% move in IV. Those things like going into January OPEX, they would like double and triple like that, So like I said, I would really not recommend trading these as like a regular way to make money. Like if you're an experienced trader, like you may be interested in trading this. For a person who is not experienced in options trading, I would really recommend that you don't. I mean, not trading advice, but it's really easy to get this wrong. These will go up in value very quickly, come down in value very quickly, and they lose value over time also very quickly. So if you're trading these, you have to understand, I would say whenever, like I would essentially not even care about the price of the underlying for trading these. It doesn't matter. There's no intrinsic value in these. there's nowhere even close to there being intrinsic value in these because of how far they're over $100 out of the money. So what you're looking at, what you're trading when you trade these is implied volatility. That's what you're trading. And if you don't get those quick kind of intraday things, and that's the thing, it's like kind of a slow move, a slow IV move also. You can't, like, these aren't going to pay off. These are going to lose so much value, extrinsic value, as theta comes out, right? The charm effect on these is going to be so strong that unless IV is doing something like it did in May and June, you're not going to beat time on these. Although you can get a little flippy flip there on an intraday IV spike, but that's my 2 cents on that. So it could be, because we did get that little IV kick up on those. It's hard to say whether the price spike in these occurred specifically because of that price move, or if it's because whoever was buying these was buying them. Could also work as a hedge by market makers. Like, market makers could be using these as a hedge, as like a way out of the money hedge for their like critical protection or something like that. Hard to say, but good question to point that out. Oh yeah, that's right. There was the musical notes, right? The microphone and stuff in the RK emoji stream. That's right. New Hampshire pattern is coming up. Yeah. The New Hampshire pattern is where oh, you remove the risk-free rate of return since there's no state tax. That's the New Hampshire pattern. New Hampshire is like the greatest state in New England because there's no state tax. And oh yeah, I know, like all the firefighters in like Connecticut and New York and whatever, like New York firefighters get great pensions, and then they're just like, cool, let's go to New Hampshire because number 1, trees, and number 2, no taxes on it, which is nice. Way to go. That's right. Yeah, and I've been talking to Otherwise about that. We've been trying to figure that out. Guido's been dropping Guido Suave here, dropping some thoughts there, doing some analysis himself. So yeah, we're trying to figure out maybe what some of that is. Going back, looking at some of the old streams, try to say what is he marking, because a lot of this stuff really does like marking dates, marking something significant going on at that date, maybe with the metadata in the stream, and then to our 69-cent mystery buyer, whoever that is. That feels to me like an ape. Maybe it's RK, maybe it's not, but it definitely feels like somebody connected to the ape community who is potentially trying to signal something. So yeah. Oh, huh. One stream was updated less than a week ago. That's right, on the 24th. Does he? I have to go look at that. Well, welcome back, man. Very interesting. What is news? What is that company? Interesting, Guido. This is good. This is part of why I love talking to you guys, right? I love talking to, like, this is the way to go, man. Like, academia is great. You can meet some cool people, but one of the things that's so cool about what we have now with the internet, with X, with YouTube, with all this is like, you can just get like, it's so easy to get ideas. It's so easy to get leads. Like, people can invest like down this lane, down this lane, down this lane, and you can I'm just so appreciative for everybody that I have a chance to talk to, and any kind of idea, like, hey, have you thought about this? Hey, have you thought about this? Like, you don't need to be an academic to have good ideas. Academia can train you in effective ways to follow up on those and evaluate the plausibility of those ideas, or at least that's what it certainly used to do. Certainly, my education, I'm very thankful for that, the training I was able to get. But you don't need to be degreed to have good ideas. So I'm very appreciative of everybody being able to contribute their ideas here. It's a real privilege. They might. I mean, there was one thing I talked about, right? So I talked about this. I also wonder the degree to which options market makers, equities market makers, who's ever worried about GameStop to the point that they're going to these lengths to internalize like millions and millions of shares of short volume. Even at the point that it like way stretches beyond like a lot of their maximum profitability stuff, like they don't necessarily need, like, why do you need to push the options contracts to be 99? Like, why do the calls need to be 99% out of the money? What's wrong with 94? Like, is there really that much more money to be gained by forcing, like doing this whole internalization stuff and forcing 99% versus 93 or 94? Maybe, I don't know. I can't see their portfolios. I can't see their books. But this seems like, no, we want to control the price because we're afraid of something else happening. I think Ultimator's been showing that too. Richard Newton's been writing about ETF and internalization for a long time and doing videos on that. His spreadsheet is great. And he's theorized that like a lot of these conspicuous drops in part also have to do with swaps. And I think what we've seen too, what Ultimator's been able to show is actually a lot of these maybe inexplicable price movements have to do with swaps and irregular price activity. So that's another category that's super, super hard to track. But I would ascribe some of it to that. Now, what does that have to do with the IV stuff? Well, what's very interesting to me too is in this condition. Once I realized that last week we were starting the IV ramp 2 weeks early, which I realized I hadn't realized it before. We did kind of do last year. We started the IV ramp up 4 weeks out from earnings versus 2. Now, quarter 2, quarter 3 report of last year, it was just 2 weeks. And it was 2 weeks on the nose. And I tracked this, right? This is what I was tracking in my articles, whatnot. And I got this. I saw this take place and I knew that this IV crush was going to come too. So, I did my classic kind of bread and butter call wall. So take a look, call wall targeted cover call. So call wall targeted cover call, you look and see where the market maker has the highest concentration of call gamma exposure, assuming that the options market itself, traders are net long on calls at that strike, which in terms of GME is probably a good bet, and say that, and understand, right, the market maker does have the ability to manipulate the price, as we've seen. And this only works, right, if you assume efficient market and honest market where manipulation can't take place, then this strategy doesn't work. But if you assume not efficient, well, maybe still an efficient market, but one that can be manipulated and is dishonest, is fraudulent, at least in part, where market makers will operate dishonestly in their own interests because they can. What you will see is the hypothesis there is, okay, if you can identify where the highest concentration of market maker call gamma exposure is going into any kind of going into a weekly OPEX or a monthly OPEX or something like that, you can assume that the market maker, this is part of the strategy, the market maker will manipulate the price such that at the very least that strike will close out of the money. Where they are most exposed, that strike will close out of the money. And so going into the quarter 2 earnings and quarter 3 earnings, I made that assumption, understanding IV dynamics, understanding that basically no matter how this is set up, knowing what I know about what the options market maker will probably do, right, making this assumption about the options market maker, that the options market maker will probably manipulate this a little bit to make sure that at least this week, this strike will close out of the money. leading up into that IV ramp up, I sold covered calls at that strike, which was going into quarter two. It was 25, so it was $25. And I said, look, they're going to ramp this up. They're letting this stuff happen. They're letting the price go up because they're going to crush it. They are going to crush this after earnings. IV Crush is going to go with it. And sure enough, the minute the market opened, like the $25 calls after quarter two took like a 90% loss. And I was like, all right, just close those there. Don't even need to hold those to expiry. Took a 90% loss. Same thing going into quarter three. Quarter three, even though it was bullish earnings, even though the price went up, the IV depreciation effect. Now, those were 30s, I think. Call wall target would have been 30s. Those also took like a 70% hit coming immediately out. And that's with the price not going down. That was just with IV bumping down after earnings. So do I know that that's necessarily going to happen this time? Not sure, right? Need to see what IV does. But what was very interesting is that IV built up. Well, quarter three was also weird because it was higher prior to earnings because of the bull trend. But it still bumped down, right? We still had and tracked that and saw that in the background. Very hard to detect. There was a lot of IV noise. In fact, if we want to go look at it, we can go see it right now. Rather than just listen to me describe this verbally. Right, so here's quarter two. Yeah, can we hop in here? How can we get this? Let's go 6 months. We just a little bit more. So you can see the whole thing. Okay. There we go. Very low. These are like 52-week lows on IV. And then all of a sudden we get earnings announced on the 27th. Where does IV go? Massive spike. Up it triples. And then that's the 6th, that's super high, came down a little bit on the 9th. 10th was earnings, came down a little bit more. Just a little bit, just off that little top because we got that huge gamma ramp that previous Friday. I'm pretty sure Roaring Kitty traded that. And the 11th, look at that. Almost cut. Is that almost cut in half? Almost cut in half. Not quite. Down in just at open, just the next day. And then within 3 days, it's down, it's down to a third of what it was. Up to 1 to 2.5, 2/5 of what it was. So yeah, crushed. And the price moved down, which is what really moved the call wall stuff out of the money there. Here, a lot of noise. A lot of noise here. Hard to tell, but right, earnings was the 11th, 10th of December. So this is where we peaked the most, right? Then we came down a bit, went back up into Thanksgiving. And then even with the shorting, right? See, this is what was interesting. Again, this is how you can tell this. If GameStop's price is moving down, but its IV is moving up, then something else is going on that's moving its IV, because GameStop's IV goes down when it goes down because the options market makers are less at risk of being blown out by a gamma or volatility squeeze. And GameStop's implied volatility goes up when the price goes up because the market maker is at greater risk of a gamma/volatility squeeze. So the market maker does not necessarily, the market maker doesn't want to be gamma squeezed out of its position. It does not want to have to go and buy all those shares and then deliver on them. It wants to just have everything. Wolverine Trading is GameStop's designated options market maker. Does not want to have to actually go and buy those shares and have that on their books and deal with that whole thing. They just want to sell their options, hedge them as minimally as they can, and then just collect the free money from who buys them. That's what they want. And so when you see something like this, right, when you see IV going up, but price going down, you know that something else is going on in the background. So we were able to identify that earnings appreciation effect was still going on here from the when did they announce it? 10, so it should have been just before Thanksgiving, actually. So Thanksgiving coming up. right? Price going down, bounced back up a little bit for a bit, but then came back down again. IV was up, 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 up. The highest, right? The highest it was, even versus back here. And then immediately earnings get reported and ka-chow, down we go. Down we go, all the way back to here. Even though the price moved up. Right, we zoom back out here. So they're going to do this. Right, oh, let me put my coffee down for a second. Let's adjust the time scale a bit here, price scale. Right, this would be right here. Right here's the earnings report. Yeah. Price hung out for a little bit. IV got crushed. Price moved up, but IV moved down. Right? That's the 11th. Price moved way up. Go back to alpha query. But on the 11th, 12th, moving down. So they'll probably do this, regardless of how well earnings end up, unless earnings go like insane. There's some forward guidance from the company. Nobody's able to internalize what happens, and it just insanely blows up. Don't know, right? And that's really gonna depend on Ryan Cohen. So what I sort of to David's question here, what I sort of was talking about earlier was the idea here that while IV is moving up, while it's in these conditions, you end up at greater risk of gamma / volatility squeeze, and that has to do with the Vanna effect. So market makers are going to have to hedge more shares than usual when IV goes up because of the effect that IV has on an options contracts delta, which is called Vanna. It's a made-up Greek letter. It's not a real Greek letter. Wall Street people made it up, so it sounds like a Greek letter, but it's not. It is a second-order derivative. Changes in delta. So delta is the rate of change of an options contract price relative to the $1 change in the underlying. So, for example, a delta of 0.5 means that for every dollar that GameStop appreciates, a GameStop call will gain 50 cents in value per share that it maps to. So that'll mean $50. So the underlying goes up $1, the options contract will go up $50. Okay. When you increase Vanna, so Vanna is the rate of change of delta per increase in IV. So if you have something like, if your Vanna metric is like 0.05 or something like that, it's like every increase in, I forget the actual base marker for it. It's like, is it 10 percentage points of IV? I don't think it's 1 percentage point of IV. No, I think it's 10 percentage points of IV. There'll be that much that gets applied to the delta. So for example, if you see IV go from like 75 where it was up to like 120 as a reference value, and at the money contract will gain about 5 to 7 points of delta versus when it was lower. So at 120, you'd have like let's say it's a $25 call on GameStop that expires in a month. If its if its delta is 50, the delta would move up from just that IV move to like 55 or 57, which means that the options market maker has to hedge a greater number of shares in order to be hedged on that position. So if IV really moves up early, right? If it doesn't move up just based on this kind of gradual effect, if you get an intraday move, if you get like 2 million volume just kind of dumped on the tape, it's going to move IV up, and then IV is going to stay stuck there, which means then that the options market maker has to use liquid margin, has to use cash to hold those shares of GameStop on their books. The alternative is then they naked it, or they try to build a synthetic long position, which I don't know if they want to do that, but it puts them in a pickle because it challenges their margin requirements. It charges like that was kind of the big deal with Wolverine back in May, June. Like they were not hedged properly on Roaring Kitty's position, and Roaring Kitty revealed that he had to do something about that because he could exercise those 120,000 calls whenever he wanted to do it, and they would have had to have gone and bought him 12 million shares of GameStop, which would have sent the price into the thousands. Who knows? Who knows what that would have done? But what we're probably seeing now in the broader market, and this kind of gets to another point that I was talking about earlier this week, is what we are looking at in the broader market, and this is sort of coordinated between what we're seeing in the crypto markets and in equities markets, is we are probably seeing a big deleveraging, and this deleveraging is probably something, somebody suggested this, I forget who suggested this, maybe it's Kobasi letter, that the very inexpensive COVID loans are coming due. So what do I mean by this? If we go, I'll bring up another chart for you guys to look at. So we'll talk about COVID loans, and we'll talk about what I'm seeing right now in our overall market. So this is the one this is the Bitcoin chart. So I'll pull this up because this demonstrates my point pretty well. So let me talk first about COVID loans. So okay, so most of us who experienced COVID remember getting stimulus checks. I got my stimulus checks, got all three. If you made under 75,000 per year or 140, 130, 125 as a household, something like that, you got stimulus checks. You got the full value stimulus checks. So I think that came up to like $9,000, 9,000 US dollars. Euro crowd, Asia crowd, whoever crowd, maybe not be a US citizen. Maybe you don't know that, but the government just handed out money. Trump did one, Trump did 3K, and then the Biden admin did the second. I think the second one was kind of both them, like Trump kind of planned it, and then the Biden administration approved it, and then the third one was Biden administration. But most people don't know that also really what the greatest coup was very inexpensive, meaning very low interest rate small business loans. And what was the abbreviation? The CEP loans, COVID employee protection loans, or COVID, I forget, it was like employee or salary protection or whatever it was. But basically, if you hired, like if you demonstrated that you had a certain number of employees, no matter what your industry was, you could apply for millions of dollars in essentially interest-free loans. So the loan rate, my dad has a small business. My dad sells collectibles. My dad sells historical collectibles. If you want to check it out, it's called Hansen and Hansen Arms and Antiques. So got my interest in history I partially got from my dad. My dad's very passionate about American history of the American Civil War, and particularly about the history of firearms in the United States. Loves inscribed pieces. He used to write for Gun Informer magazine, like very interested in sort of the history behind individual artifacts, like craftsmanship that goes into like presentation firearms. That's his jam, always been his jam. And yeah, he owns a collectibles store where he sells these, puts these online, that sort of thing. So my dad, small business, couple employees, and this made sense, like, from my dad's standpoint. Okay, maybe you're not going to get as many customers, sort of a thing. Like, how can you sort of keep things running? So, the government said, okay, we'll give you small business loan. You're of this class, so you can have up to $100,000. We'll give you a $100,000 loan. It's payable over the next, I think, 20 years. I think it was 20 years. It's a 20-year loan. Maybe it's a 10-year. No, it's 20-year loan. And said, okay, your interest rate is 2%. You have a 2% interest rate. Okay. So naturally, my dad said, I'll take that loan, use that for inventory. There were conditions. It had to be used to cover employee protection and for the acquisition of new inventory. So, my dad does collectibles. So he's like, I'll go get some new inventory. Sounds great. You're just going to give me free, essentially, you're going to give me free inventory that's just on like the past, whatever, 3 years of taxes, like small, like business taxes that I paid over the past 3 years. You're just going to give that back to me. And now I just go and buy inventory, like tight. So he did that and, worked out really well. Like it was a great stimulus loan for his business and okay and great. Well, but not everybody's like a mom and pop little antique store in, Southern Connecticut, right? Like there were private equity firms that could take this stuff, or there were specialized loans that said like, oh, okay, you're a bank and you have these employees. We'll let you have $250 million to continue your like trading activities, stuff like that. There were margin loans that were given out to, prevent the collapse of infrastructure, right? So all of this liquidity, the federal government in 2020 introduced massive amounts of liquidity into the markets. I think they're different than the small business loans. I believe the term is 5 years on them, at like 2.6%, something like that. But that's free money. That's free money because number one, right, if you've been with us, right, number one, inflation's a lie. Whatever the data is presented to you is a lie. So when the data says that inflation is like 2% or 3%, it's probably more like 6 or 7. That's number one. Check out Shadow Stats if you hadn't had a chance to check that out yet. Shadow Stats, right? The government changed the way they measured inflation in 1980. So if we were going with the pre-1980 standard, inflation would essentially never have dropped below 5% in the past like 20 years. So number one, that's a lie. But number two, inflation actually did go way beyond that, even in the reported stats. So 2021 into 2022, inflation got up as high as 9.6%. Reported, which means it was probably something like 15, 16, 17%, maybe higher. Maybe it was pushing 20. And if you look at the pricing of things, like, there's the meme from like the Walmart order and stuff, like that actually tracks. So margin loans, right? Why did the stock market go up? Why did all this stuff go up? Why did we get all these like single stock, triple leveraged ETFs? Everybody had free margin loans. 2.6%, it's free money, free leverage. You've just got 5 years to play with it. Now, how many people you want to bet took that and then extra leveraged it with like the yen carry trade, right? This is speculation to a certain degree, right? I don't know. I'm not at that level of finance, but the COVID thing is where a lot of this liquidity came from. Looking at, I remember when, Yale, when I was still finishing up my PhD, Yale posted in 2021 or 2022. It posted in 2022 that the 2021 fiscal year it made 46% on its endowment. Like it made 44% conservatively investing like $30 billion. 44%. So a lot of this liquidity comes from, these essentially free money that was given out to investors during COVID, and it's possible that that's becoming deleveraged, and with the yen carry trade at the same time, we have both of these are being factored in, which is reducing available liquidity, which is meaning that, hey, this is placing these funds at greater risk, because it's placing banks at greater risks. Whoever is investing is at greater risk, because they do not have the same degree of liquidity in order to cover bets if they should go wrong. So what we may be looking at is money, right? This liquidity being taken out of the market as a deleveraging to remove risk, and to do this gradually in order to protect against some sort of, broader market correction, deeper market correction event if something adverse should occur, which, by the way, would make sense from the point of view of what Doge is doing, right? So again, if you've been with us for a while, you'll know that we talked about, right, with CPI, right? What is SPY? SPY basically just tracks real inflation. SPY's gains line up. If you use the pre-1980 metric, the pre-1980 historical appreciation of the S&P 500 is identical from 1980, inflation from 1980 to today. If using a pre-1980 metric is identical with the appreciation of the S&P 500 from 1980 to today. It's identical. It's different by, a couple percentage points, maybe 10% or 20% overall. So we're talking like historical inflation is something like 4,000, 4,400%. And SPY's historical appreciation is something like 4,400 something, right? Very, very similar. So when inflation goes down, right? When you're reducing inflation, you are right. You're reducing the projected returns of the S&P 500 of equities. So when you see inflation go down, and when you see like real economic growth versus just a growth of liquidity, people are going to turn, or institutions will turn their investments away from the market because it doesn't give you that kind of obvious return versus everything else in the economy, right? You may look to venture capital or business investment or bonds, right? Things that, because you can't rely on inflation as a way to increase your wealth versus the resources of everyone else in the economy, right? In the same way. So if what Doge is doing, right, and we're starting to see this, part of, say, U.S. GDP factors in government employees. So like, Elon recently had the example of, maybe we should remeasure that because you can increase the number of employees at the DMV who are processing driver's licenses. And that will, that's going to register as increased GDP. Because more people are hired and being paid a certain amount of money as an evaluation of the service they're providing. But you could do something like say, oh well, everybody needs to renew them. You could just arbitrarily come up with that. You've produced nothing. Nothing has been produced. You created a need by, let's say, executive fiat, and now you need more employees to process this executive fiat. Quality of life hasn't improved. You haven't made a wealthier society. You've just created a need for some kind of arbitrary documentary service. You said this service has to be provided, and then hired people to do that. That's going to increase your GDP, but nothing, no tangible good or element of prosperity has been increased that corresponds with that GDP increase. But if you're removing people from government services, which Doge is going to do, is only just started to do, you're going to see a GDP hit in the short term. You're going to see a GDP hit. You're going to see a decrease in inflation. This is Doge's stated goal, right? So inflation, because the government does not want to raise taxes, the way that the government acquires taxes is by issuing bonds and then inflating the currency so that they can afford to pay those bonds. So when you inflate the currency, you take value out of people who are not leveraged. Okay, this is why the so-called inflation tax, right? Peter Schiff talks about this all the time. He's always a perma-bear on a lot of stuff. Don't agree with Peter Schiff on a lot of stuff. He can be angry or whatever, but he does talk about the inflation tax. And the thing about the inflation tax is, right, so the government prints money, and as it prints money, people who are leveraged, people who are invested in markets, in equities, in things like this, which is not... Well, in the U.S., let's say that through pension funds or things like that, it's up to like 60-something% of the population is invested in markets. But at least a third of the country is not. And that third of the country that is not is the least socioeconomically well off. So when you put a strain on the economy through inflation, when the Fed prints money, it affects... That is making the poor poorer and making the rich richer. Because the people who can take advantage of that inflation or people who already have the capital resources to do so. And the people who cannot take advantage of inflation are the people who do not have the capital resources to do so. So when you reduce government spending, you reduce the need to inflate the currency. Well, but because you reduce the need to issue bonds in order to cover your expenditures. So it seems that like part of the tariff idea is to get other countries, non-US taxpayers, to cover certain government expenses for the US. But regardless of how that actually all shakes out, if inflation, doesn't go up, GDP goes down in the short term because unemployment numbers are going up, you have the COVID loans deleveraging, we're going to see a contraction of these more speculative markets. We're going to see a contraction in equities, and we're going to see a contraction in crypto markets, which is what I marked up here earlier in the week. So let me see. Let me make this a little bigger for you guys. And what I think, this is something that I've started to take a look at. I think we are seeing this with respect to our momentum indicators here. So trying to read this on the weekly momentum, right? Everybody talks about double tops, but like, what is it about a double top that makes the second top end up, resulting in a bigger retrace to the downside? And I think what we see is the double top. Usually when we see a double top formation that then sells off heavily, is underneath it, that even if the price moves higher, we have actually a contraction in momentum. We do not have the same momentum that achieved the first top. So here's Bitcoin, right? Here's Bitcoin going into the 2022, 2023 bear market. 2021, man, we got this like close to 70K top, came back down, found a little support, came back up. But underneath it, momentum, very different, right? So we have the price momentum oscillator, which got from Roaring Kitty. So this is Roaring Kitty's configuration on the price momentum oscillator. So what's different about this is he overlays a 55 moving average relative to the PMO. So he's got a double signal line here. So he's got two lines. He's got a 20 and a 35 moving average on the PMO and looks at crossovers there. But then he's got a 55 as an extra signal line. And then he's got the 0 line. So typically crosses in one direction or another. So cross to the downside means momentum is going down. You're looking at more bearish momentum building. You get a cross to the upside, it means that bullish momentum is building. So each of these types of crosses signals a deeper level of momentum moving to the upside or to the downside. So if you look at, say, the first top in 2021 versus the 2022 top in Bitcoin, the momentum profiles are very different, even though Bitcoin got a higher high in 2022 than it did in 2021. Bearish momentum, right, did not get up as high, even though we had some slight recovery here in momentum, did not end up crossing back up above the signal line at the 55, and then the 55 started to curve down, right? That's a deeper moving average. That's a longer term moving average over 55 weeks. That started to curve down, which meant that over the average course of a year, you're looking at more bearish momentum than bullish momentum. And that, when that signal popped up, man, that's when it really started to fall off, which was different because that's not what we had in 2021. Still bullish momentum at that deeper level, even though we had a slight cool off in some of the shorter term momentum. Okay. Now, if we fast forward to today, we see that same pattern here in Bitcoin. We see, okay, into 2024, big top, then it cooled off a little bit, but our deeper momentum indicator still moving up to this new higher high that we just had earlier this year, right after November, after the election and into early 2025. But we can see did not cross back up above that deeper 55 moving average. And what it looks like is now everything, right, that deeper moving average is now curling down with the shorter term PMO. So now we have bearish momentum building. Now, does that mean, oh man, in all time the Bitcoin case is done? No, not necessarily. But what I'm saying is it does look like we are seeing the same types of indicators that brought about that deeper correction in 2022, 2023 are now coming up here in the crypto market. We can take a look too. Similar dynamics here over in the S&P with equities. Here's the bear market beginning. We can see logged a higher high versus this cross back here. We got a slight correction, but then really the downturn is when we got that deeper 55 moving average, started to curve down. So deeper bearish momentum starting to build, and then we get that move into a deeper correction. We see something here, right? We got a higher high, but did not move back up above that deeper market there. So, and we can see this was from earlier in the week. And what do we see towards the end of this week? A deeper correction than we've seen usually. And that, right, we will see these hitchbacks, but it really looks like, yeah, maybe for the next year, we could see bearishness in our broader markets, which aligns with what would make sense from what Doge is doing. Like, some people might not necessarily like seeing that in the short term, but the idea is, okay, what's that going to mean going forward? Well, you know, it may prevent a real kind of like doom crash situation down the road. Remains to be seen. We'll see. We have to see if what the current administration is doing is actually going to have the purported economic effects that they suspect it will. If it does, then yeah, down the road, then we will see a corresponding equities boom because it will reflect the increased value that's been added to the American economy. If it doesn't, then I don't know, somebody can come back in, do liquidity fairy stuff, and then that'll probably make the markets go higher until people can't do that anymore. But we'll see. But that's basically what I'm seeing play out there. Okay, I'm going to pause for a second again and take a look at the comments. Very good questions, by the way. This is great. This is why I love talking to you guys. We got a few. Ooh. Cheers, my friend. Cheers, Captain Chris. Take a little coffee break myself here. Man, we got 500 people in the stream today. This is amazing. What is up, everybody? 508. This is incredible. Cheers, guys. I'm so happy to see you all. Thank you so much for being here. This is fantastic. I have not yet, April, but it's great to see you. That's okay. We'll get to that. We'll get to next week. We're talking some macroeconomics, I guess, right now. Oh, servus. Dankeschön. Sie sind vielen Deutsche hier in Koh Lanta. Sagt man in Koh Lanta? Ich weiß nicht. Is there a certain news catalyst we are expecting to look for in the upcoming weeks or months? Okay. We'll get to this. This is a good question, Kurt. Short Fridays. We will get to this. Earnings waiting room. We can call this the earnings waiting room, yeah. We'll just name the streams from now on the earnings waiting room. That would be cool. Auf Koh Lanta. Auf Koh Lanta. Dankeschön. Oh, great question from Ken here. Will I be losing $70 million during the live stream as Kitty did in July? I did not plan on that today. Maybe we can schedule that for next week. We'll put a vote. We'll put it to a vote. But great question, Ken. Okay, I guess we don't have that many comments to catch up on. PPE. That's it, Rash. Thank you. Something protection, something else. That's PPE loan. That's right. So in terms of a catalyst, what could we expect in terms of like a news catalyst? This is a great question. This is something else that I was talking about a little bit in my video earlier. That got me kind of excited. So that is, well, we might have a couple things coming together. And what those things might be is a combination of what I think we've been seeing hinted at by Larry Cheng and what Nat Turner has been talking about in terms of PSA. So two things here. One is a catalyst based on GameStop fundamentals. That's number one. And two is a GameStop, well, fundamentals in terms of like, maybe we should call them GameStop due diligence, actual true due diligence. We see DD thrown out everywhere. It just means somebody looked at something really hard and then wrote about it really hard. Actual due diligence has to do with like looking at a company's revenue, expenditures, earnings, month over month, quarter over quarter, year over year, like looking at the fundamental metrics of a company. But true fundamentals is actually what the company is doing, right? Fundamentals, as the market talks about it, is fundamental metrics, DD. So one of them may be a due diligence catalyst, let's say the fundamental metrics, and the other may be the fundamentals of what the company is actually doing, combined with some forward guidance. So like I said, I did talk about these in my video earlier today, but I think they're worth visiting in some greater depth here in today's live stream. And they are as follows, right? So the metric catalyst is something like what Larry Chang has been alluding to for the past couple months. So Larry, back I think in December, so this was around the time that Ryan Cohen started sending signals that look for earnings, look for March 25th, 26th, something like that. We got another little hint at this over in the GameStop post about like, look at this post from number 20, from 2005. And what Larry has been suggesting is he's like, hey, you will see companies' valuations go up tremendously in the market when you can see any number of things. So for example, his post back then, let me see if I can find this maybe. Let me go, what would it be? Well, his post back then was something like, when you're trying to achieve a company transformation, right? You're trying to reveal its value. There are a couple things that are necessary in order to reveal maybe the value that leadership sees as potential in the company, or that investors see as potential in the company, that have to happen before basically the broader market sees that. And he basically said, okay, so you're going through a transformation. You're turning the company around. You're becoming profitable. You're reducing expenses. You are, shoring up the bottom line, like all of these things. And you're wondering, you're not seeing it. You're not seeing the company appreciate. You're not really seeing it to the degree that you believe is possible. And what is the case is what he said back in December was, you have to wait, number one, for revenue growth. So that is basically the one thing that bears on GME right now. That's kind of the only thing they have left to accuse GameStop of, basically not being worth these elevated price targets, right? Why is Wedbush and guys like Michael Pachter, like, why are these guys still coming out and saying like, oh yeah, GameStop $10, it's overweight, you should sell until it's $10 again? Well, okay. You could say, well, Michael Pachter is bought and Wedbush is short on GameStop, right? Which is probably true. And so, that's why he's motivated to say that. You could say, okay, yes, that's true. But why? What is the actual case, the face value case that he's making for that? And it's that GameStop is not showing revenue growth, right? It's not showing, or it hasn't up until recently, even basically through the past couple quarters, shown revenue growth. The central business is not showing and has not yet shown revenue growth. We've seen increase in profitability, but not increase in revenue. The revenue has declined while profitability has increased. And that's been a part of Ryan Cohen's plan, is to seeing revenue decreases is not necessarily bad, because you can have revenue whose cost to secure and maintain exceeds the value of that revenue itself. And Ryan Cohen is showing that he has the ability to go through and figure out what is the revenue that is too expensive to maintain. And this has been closing the stores in Germany, closing the stores in Italy. And now basically he's saying, actually, the Canadian market and French market, right? So Micromania in France and GameStop Canada, also not worth, that revenue is not worth the expense. So he's trying to, and this has been his plan, right? He put this in his letter back in 2021, his letter to the GameStop board. And okay, but you still could say, okay, well, what's the forward guidance? You have $4.6 billion, you're shoring up revenue growth, but like that money could be better spent in treasuries, right? Like if they just completely sold up, this is kind of the meme, Wall Street analysts like withering cynicism, being like, they should just go and just become a bank with their $4 billion. They should just sell off the entire business because it's, just the 4 billion alone is worth more than their entire business. Whatever. No vision, no potential, right? Wall Street never has a vision for potential until it's already something that's in their interests, right? So, yeah. So with that, revenue growth is something of a kind of last barrier, and Larry Chang pointed that out around December 30th when Ryan Cohen started to say, like, look for yearly earnings, look for yearly earnings. Larry Chang, with this tweet here that I put, that I put in my post earlier today, my article earlier today. Oh wait, no, it's not this one. This is cool. We'll talk about this in a second. But he was talking about, oh, where was it? See, now I got to go look up. He was talking about actually rate of revenue growth. This one. Here we go. This one. Okay. Here's a tangible sign, right? That product investments have been impactful. Sequential quarters of a company's top line growth rate growing, combined with sequential sequential quarters of sales and marketing spend declining. Growth with lower spend is the operating leverage flex. So Larry's saying, look, there are three things that you want to pay attention to. Right. He also had another one that said growth rate. Right. So why are certain companies, right? Like why do you see, even though like Nvidia is doing great, why do you see sometimes earnings where it just falls off a shelf, right? And part of that has to do with, say, like it's still growing, it's still profitable. All these things are true, but the growth rate is slowing, and so you can see a price down if you see growth rate decline. And the inverse is true as well. So that's, markets pricing in future growth potential. If growth rate declines, it means that the overall growth expected over the next 5-10 years is lower than it was previous to the understanding of that growth rate. So what he was saying is, like, you can see a price down if growth rate contracts, but the inverse is true too. If you see growth rate increase, you can see a pretty profound price up in the markets, in the company's valuation. What he's saying here too is, okay, if you have revenue growth, number one, if you have growth rate, the rate at which revenue is growing, and then if you say the rate that you are growing is increasing while the operating expenses for achieving that growth rate are going down, oh man, that's your coup, right? That's when you turn a corner in terms of your valuation being recognized. That's when an investment really starts to pay off, right? He's coming at this from the perspective of venture capital. That's what you want to see. That's the turning point. So basically, as I read this, it's like, wow, Larry's maybe not directly talking about GameStop because he can't. He's an insider. He has non-public information that disallows him from speaking directly about GameStop. But this is basically the situation that GameStop is in right now. Okay, this annual report has the potential to reveal all three of these things. Number one, we can be pretty confident on. GameStop is projected to show, well, okay, number one, actual growth of revenue. It's going to be a question if the PSA revenue can offset some of the revenue decline from, say, closing the stores in Germany, Italy, and some of the non-profitable US locations. We'll see. But is the PSA revenue necessarily, is that enough this past year, maybe yes. So there's that. But is that growth rate going to improve versus previous years? Potentially. If it does, that will, of course, have been achieved while lowering operating expenses. So if we can see, even if we see 2 of those 3, but if we see all 3 of those things in March, that's going to be what I would say is a DD, an actual due diligence, or a fundamental metrics catalyst. Like that is a true earnings catalyst that would, or should, I should say, see a significant price appreciation in the company's valuation. And, you know, it's worth asking the question, to what degree do these price ups happen instantly because of algorithms, right? The algorithm just gets the data, updates the data, compares that to, you know, 1,000 other, right? And maybe it's even AI related, right? The AI has multiple algorithms for comparing these things, does that comparison, and then goes, oh, price up, buy, right? As long as it's below value, buy. So maybe we see something like that. Some of the, as Roaring Kitty would say, we get some of the beep boops on our side. Yeah. So there's that. The other thing is what I would say is the actual, maybe some forward guidance catalyst here. And this is what I was speaking about in terms of PSA. What we talked about, actually, last Friday's stream, we talked about this. Some of you weren't here. Actually, 90% of you weren't here because it was a smaller crowd. But let me lay out this model again for those of you that hadn't had a chance to take a look at last week's stream. So what could GameStop do? What was the point, right, of this NFT marketplace a couple years ago? What are the potential, what's really the potential for the partnership here with PSA and trading cards? Like, is it just that the trading cards are a high margin item? Really, what's going on? And I think, you know, this has come to me, as I said earlier, you know, some people will drop this idea, drop that idea. I've, you know, benefited from reading a number of different people's thoughts on this, but basically the kind of model that would make sense and be extremely disruptive, you know, in the sense of disruptive to an industry, or something that really just sets GameStop apart, or allows GameStop to access or to revolutionize a market that basically no one cares about, is being able to combine e-commerce, blockchain, and collectibles. And PSA is also a company that is seeking to do that. We don't know necessarily with blockchain, but this may be the blockchain element that gets inserted here. So let me reveal what the partnership, let me speak about what the partnership with PSA has meant so far. I'll make my face bigger for a little bit. Okay, so if you think about basically prior to what PSA's efforts have been doing, what did it mean, or since I should say, you know, Nat Turner and Company purchased PSA back in 2021, what has that meant for the trading card collectibles market? All right, so both like I said, my dad and my brother, actually, my brother also has a business that's involved in collectibles, different classes of collectibles. So my dad, right, like I said, my dad has a business selling historical antiques, right, antique firearms, presentation firearms, like from 19th century, 18th century, stuff like that. And my brother has a business selling used, you know, secondhand clothing, but finding particularly valuable, appealing secondhand clothing that people see, you know, people see value in, right? Being able to say, like, crazy high margin in the sense of, I think they call, like, the guys who go do this, like, pickers. He's not a picker, but like he has pickers who like work for him. He'll buy like clothes in bulk, and then he's got like a team of pickers that'll go through these clothes in bulk. I think that the term is bulk rag is what it's called. But then they'll find like actually quality clothing that has some kind of artistic element to it that appeals to a particular aesthetic and collectible taste in people. And then, you know, you can buy bulk rag for like, I don't know, 3 cents to the you know, 100 pounds or something, and discover, you know, you can find, even if you find one shirt in 100 pounds, it has some kind of aesthetic value to it. You can go sell that for $25 and have like a 1,000 or a 10,000% markup because you acquired that for the price of the bulk rag. So my brother has this business as well, and it's he has a secondhand store now. He does online business, stuff like that. But you say what's really behind those businesses, and what service is being provided? Like, is that just grifting? Is that just like, are all businesses just grifting and pretending that trash is treasure and just like hyping people up about that? No, right? What's really happening there is some kind of valuation in the thing itself, right? There is some kind of artistic value. There is some part of human experience that is represented by the collectible, that's contained in the collectible, that allows human beings to have a connection to some part of themselves, right? It allows them to be more conscious of some part of themselves, and that part of themselves is embodied in the artifact or in the piece of art. It reminds them of some piece of experiential truth, right? This is the function of representation in art in general. It's why collectibles. What is it about? Why do human beings like to collect things? Why do human beings like to paint things or draw things or this sort of a thing? We are representing creatures. And part of the way that we become more conscious of ourselves and more conscious of how to behave in the future, how to preserve, let's say, behavioral, procedural, and value information for acting and living better in the future, is that we represent it. That is the purpose of art. And collecting art, right? Collecting some kind of artifact, something that someone has crafted. Ars is a Latin word which means craft. Something that someone has made is a part of that. So what is it that actually somebody who has a collectibles business does is able to find the pieces of that actually contain that, can bring that experiential element that is contained within people's psyches and people's experiences, like the story of their lives, and is able to preserve that and keep that in a conscious place for whoever actually has the collectible and displays it. So that's really what's going on with a collectibles business. Now, what the collectibles business owner does is this business owner is able to find that and then make that liquid, right? So there is value, right? Value originates from human beings, right? Value is not some abstract thing that exists out there in the world and then we find it as human beings. No. Value comes from the prima facie experience of human beings. We are the source of value. Human beings are the source of value in the human world, right? Okay, animals too have a way of valuing anything. Whatever has life can value. That's perhaps a way to differentiate things that are alive from things are not, if it can value or evaluate something, right? And so we do fundamental evaluation we make through our emotions and through what we might call affect. So hunger is something that reveals value. It's an experience of being particularly attuned to perceiving a certain source of value and value in things which can relieve us of that hunger. Something like that. So value originates from the human condition. Let's say in a human world, it originates from the human condition, but it really originates from all life. And what the collectibles business owner can do is can find that value, which is hidden, right? It's stored somewhere, can perceive that, and then make that value accessible in a market context, right? It can place it in a free market context and then allow individuals to whom that value is more salient to invest their resources for the acquisition thereof. So with PSA, with these cards, if we think about the trading card market, it is a form of this collectibles market. Trading cards are a form of art, right? They represent some sort of human experience. For many people, it could just be, something like Pokemon cards can be a representation of their experience as a child. And it can be easy for us as adults to forget the parts of us that have that kind of childlike wonder or joy or fantasy or potential or creativity in the way that we approach the world, something like that. So it can mean that to some people. But for most people, right, a lot of these cards, a lot of this, there's capital, there's real value that's contained in these cards, but that value may be located for someone else. That value may be somewhere else out in the world, out on some different side of the world, some different part of the country. And someone may say, well, I have other things I value more, but I have all these cards on my shelf, but what am I going to do with all these cards? I don't know what to do about them. Like, I have a bunch of cards sitting on my shelf. Like, I personally do. I have a few thousand Pokemon cards sitting in this like baseball card trading box, trading card box that I've had since I was 5-6 years old. It's the same box. I'm pretty sure I've got like, a PSA 9 or a PSA 10, like 1998 original Charizard in there somewhere that I like, ripped from a pack. I've got a bunch of those, but like, how do I even thought about that a few years ago, being like, well, I need some money. Like, these are cool. I like these, but, what could I get for these? Maybe I could invest this, right? Trying to build a family. Like, maybe I can invest this better. Like, trying to plan for kids, something like that. What can I do with this? But 5 years ago, the process was, okay, first off, where do I even find a place to grade these? Okay, there's this service called PSA. Well, where's my nearest PSA grader? Well, there's one about an hour and a half for me, right? I was looking at this in Connecticut. I was like, there's one for an hour and a half for me that's like in like Glastonbury or something, or like Litchfield in Connecticut. It's like, okay, I could go up there. That's going to be a bit of a day. But let me look on the website. Well, this guy really looks like he only does baseball cards. Does he do Pokemon cards? Who does Pokemon cards? Oh, this guy, maybe he doesn't do Pokemon cards, right? So all of a sudden I go, well, in order to engage in this market, in order to make this value that I think is trapped in these cards, right? I think there's value that's frozen. There's frozen capital in this asset, in these Pokemon cards. But the cost for me to enter the market is prohibitive. I have to invest 3 to 4 hours of my day. I have to get a tank of gas to go drive up to this place. I have to gamble. This doesn't become, a sure bet. This is actually just, that cost is just a knowledge cost. That's not even cost to enter the market. That's before I even get the card graded. Maybe that guy doesn't do Pokemon cards. Maybe he does. But okay, let's say that he does. Now I've got to pay him to evaluate each card. What if my card is actually it's not worth, let's say I could sell the card for $25, but it costs $19 to grade it. Well, I'm taking a net loss just to go get that card evaluated. I've got to put up all of this capital just to get these cards graded. Okay, here's where GameStop PSA, this partnership, comes in. First off, now that one PSA guy out in the boonies who, maybe he only does baseball cards, now this guy is GameStop. There's a GameStop 15 minutes from my house in Connecticut, my parents' house in Connecticut. Cool. Okay. Way easier for me to go get these graded. I know they do Pokemon cards because they do all kinds of trading cards. And I can see that very easily on their website. And if they don't have it listed on their website, I can see actually a price reference log over on PSA. And I know that PSA service is going to go through GameStop. So I can go to GameStop, I can get this evaluated, I can pay a fee. But now think about this, right? It's not just a fee where I pay one guy and then I have to decide if I'd like to enter the market. GameStop now will offer to buy the card directly from me and waive the grading fee. Way reduces the cost to enter the market. Okay, so knowledge costs are reduced and cost to enter the market is reduced, both in terms of what I'm putting up in terms of capital up front and what I'm putting up in terms of like actual effort and energy and all that. I don't have to, I just 15-minute drive to my local GameStop. Don't have to drive an hour and a half to a random PSA guy who might not even grade my Pokemon cards. All right. Now, what Nat Turner here is revealing is something we talked about last week. And that is what the next step of the Pokemon or the GameStop PSA partnership may look like. And that is, number one, digitization of the evaluation. What Nat Turner is revealing here is the possibility of a full digitization of the evaluation process through the PSA scanning app. So PSA now has an app. Nat Turner just revealed that PSA has spent the past 4 years looking at millions of photos of cards, moving them into a database so that you can just hold up your phone, right? You can just hold up your phone scan the card, and it's going to come up and it's going to tell you exactly what it is, exactly what the different criteria are for grading, and then it's going to tell you exactly the entire order history on PSA, on the PSA marketplace, for the prices that card has sold at. Whoa, way reducing knowledge costs, way reducing cost to enter the market. Okay, you don't have to, okay, you still got to pay to get it officially graded, but like you can ballpark that super easy. The other thing is this now presents the potential. If you compare this with blockchain, you can now fully digitize. You can have blockchain. Okay, so finish one thought, get to the next. If you compare this with blockchain, you can turn this into a fully digitized trading card market without the need to invest in the actual physical logistics of moving the cards around. So what does blockchain really do? Like, you know, we've seen crypto markets, we've seen meme coins, we've seen, you know, all this stuff. And yes, okay, we've thought about blockchain. Most people think about blockchain in terms of cryptocurrency or in terms of just trading tokens. But what blockchain really enables you to do is it enables you to establish object permanency in the digital realm. It allows you to establish object permanency in the digital realm. So you're not just trading random nonsense all over the place where somebody can copy it or defraud you like we have with the rehypothecation crisis in the equities markets. You have a unique digital token with object permanence that corresponds to a physical permanent object in the real world, just like we have in physical reality. So what you can do is you can, if you're PSA, if you're GameStop, you could relaunch the NFT marketplace with the tokens that you trade, not just being digital objects, but a digital object that corresponds to a physical collectible trading card. You can send your cards over to the PSA vault, which Larry is also revealing for us here. Right? Larry just said, transferred my collectible card collection to the PSA card vault, which has a good online management platform. It's like upgrading from holding paper stock certificates in a file cabinet to having an online brokerage account. So this is the idea we talked about last week. This is the exact model here. GameStop and PSA can come together and create a broker, like essentially a brokerage and marketplace for selling collectibles of all kinds. They can start with trading cards. They can do the technology with trading cards. They can pair NFTs. If you go get your card graded by a PSA, what you're also paying for is you're being paid also for you pay for these services. You can send it into the PSA vault. PSA is now going to preserve the value of this, is going to protect the value of the card from deterioration. They're going to certify that the card exists and is in their warehouse somewhere. There is a physical one. It's going to act like a clearinghouse, right? It's going to act like the DTCC. Then you're going to be issued an NFT. And rather it being like some, toonie or something like that, like weird image that you have and it's going to be tokenized with reference to that physical object. And then you can go and you can trade that digital token the way you would any other token. But as a trust mechanism, right? As a protection against like being rug pulled, as a protection against like fake liquidity undermining the value of your asset, you can at any time pull the trigger and say, I want my card delivered. PSA will destroy the token and then just send you the card from the vault. They'll take it out of the vault and they'll send it to you. And then you can pay again, of course, to have it registered and put back. But it'll work like computer share, right? Where computer share, you pay to have it, kind of digitally registered there. But it'll be that, but with cards. And then, you can expand other collectibles. You can do that with game systems. You can do that with physical games. You can make that the default way that you market games, so that when you sell video games, all your games come tokenized, and you will always have that token. Either you'll have that token which you can use to as like what would it be? Sort of like a unique key phrase. Like you have the digital ID of that token, which then you can send to whichever game company or to GameStop itself, probably the GameStop itself, and you can download on whatever console you have, whatever you have to run the game. You can use that token in order to get the direct download. But if you want physical media, you say, "Hi, I'd like this delivered as physical media," and they say, "Okay, cool. Like we're going to destroy your token. We'll send you the game. Now you're going to have a physical copy." And so you can do that. You can do that exchange, and you can perhaps even do that with games that you already have. Think about like this big snafu of like Xbox, right? Xbox Live going offline. Like the 360 support and the original Xbox support, and the Halo matchmaking rooms are down. Halo 3 matchmaking rooms are done. Like you can't play Halo anymore because they just removed the platform support. The PSA, the PlayStation Network, all of the like games, like PlayStation was like, okay, we're going to take all these retro games and we're going to digitize them, buy them on your PS3, buy them on your PS4. Now they're yours and you can play now, and they're all centralized here. PS Network's gone, and they go, oh, sorry, you don't own that anymore. That was a temporary license. Sorry. But if you have a token, if you get issued a token, you can say, no. I own the rights to a single license of this game. So long as I have this token, I'm buying something with object permanence. And you can see that dynamic move over into the video game space, where customers are essentially being defrauded to a certain extent. They're being taken advantage of by major software and console companies. You have stuff too with like downloadable content. All right, you have the disc, but now you can't run it because there's no network support. And all of the DLC that you had, or the extras that you had, the in-game purchases that you made, they're gone forever. Like maybe you bought the game for $50, but you spent $200 on DLC. All your DLC is gone. Good luck. Sorry, right? This can be a way to circumvent that entire dynamic, wherein GameStop would completely revolutionize, in part e-commerce, in part video game retail, but in part with this whole PSA collectible thing, could essentially establish an entire online marketplace that would look like Robinhood or a cryptocurrency market, but would be way more secure, way more trustworthy, and essentially become a competitor for these popular retail household investor brokerages, something like that. So that's what Nat Turner and Larry Chang are revealing here. So to this question about what kind of catalyst might be coming up, we've got Larry on the one hand hinting towards earnings-based catalysts, right? So revenue growth, rate of revenue growth, and a less expensive, lower costs for increasing rate of revenue growth as potential earnings catalyst, and more of this potential plan for with the PSA partnership, with the NFT market, the whole blockchain thing, all of this coming together. What that we might get some forward guidance on that. So it really looks like this is the plan. Like, I'd put that together based on some ideas that people had for certain dimensions, and then kind of put that together as a model a couple weeks ago, and then again we talked about it in the live stream last Friday. But like seeing this come out this week was like, oh, that's literally what we just talked about. Like, that's insane. They might actually do this. Very, very cool. Very cool to see that potentially come up. So, I mean, if we got one of those, that would be big. If we got both of those at the same time, plus, I don't know, what happens if Ryan Cohen, as soon as that news is dropped, Ryan Cohen goes, oh, by the way, also, yeah, I'm going to put another $1 billion into my stock. Because like he only bought, this is the thing I was referring to earlier this week too. Ryan Cohen only put like 100 or 150 million into GME. The guy's net worth is like 5 or 6 billion. He got $2.5 billion from Chewy. So from the $2.5 billion Chewy sale back in 2017, the guy took 100 mil from that. Just like, right? When you think about that, like, is it nothing? No, it's not nothing. $100 million is a lot. But if your net worth is, 4 or 5 billion, 100 mil is not it's not like a do or die position. It's like, would it suck to lose that? Would it suck to lose a part of that? Sure. But that's not that much. His position is now worth over $1 billion because GameStop is 10x since he bought in, or 20x really. But what happens now if he takes, like, they say he's got this billion in Alibaba. Allegedly, there's no actually official filing that that's true. We have no idea. He's got like $1 billion in Apple. He's got like $1 billion in Wells Fargo or something. Like, what happens if he sells a part of these positions? And then even if he puts like 250 mil into game, what happens if Nat Turner's going to buy in? What happens if, then Roaring Kitty goes, cool, I've been, trading Unity and I've been trading Chewy, and we already know Roaring Kitty had whatever his position was worth in Chewy. His position in Chewy was worth like $250 million. What if he puts what if they all just start doing this at the same time? What happens? That might be right. And we see all these hints for March 24th, 25th, 26th, something going on there, right? We also potentially have the Bill Huang Archegos swaps are coming up in like 2 weeks. What's going to happen there? Like, Archegos is gone, but somebody's holding those bags, right? It was Credit Suisse, and then Credit Suisse blew up, and now it's UBS. So what's going to happen to UBS? What are they going to do? So that's basically what's on my mind as far as catalyst stuff, and why I am particularly excited about what's coming up at the end of March. I don't know. You guys can let me know what y'all think of that. Interesting, from Faye Shaw here. I do not know, from Ty Tazol. Would you DM me something about that over on X, or if you put it in the chat here, I can go take a look. Yeah, man. Really. This is what I said, right? This sort of the meme for that I put at today's thumbnail is Gandalf the White, right? Saruman as he should have been. The idea that GameStop might actually, right? GameStop could become what Robinhood billed itself as. It could become the brokerage, marketplace, trading platform, for the beginner, average household investor. Makes it easy to trade, right? Of course, Robinhood secretly all of this time was a ploy by Citadel to gain access to retail order flow data and clicks, right? So they also pay for not only do they front run Robinhood order flow, but they front run clicks and like taps on your phone prior to executing the order. So they get a sense of, they can feed that data to an algorithm or to an AI or something to front run your trade while you're entering it. Amazingly, right? So Robinhood as it should have been. I remember those. Yeah, that's a good. I remember I was in the mall, April. I was in the mall. I was like, I don't know. I was a kid, 8, 9 years old, maybe something like that. And right, they were like, it was like a play on the Cabbage Patch Kids, right? Everybody went nuts over Cabbage Patch Kids, and then I think it was Mad Magazine like originally came up with that. They like had a story where they were like the Garbage Pail Kids as a joke on Cabbage Patch, and then they made collectible stickers, and they're kind of popular. So maybe April, right? We don't know. Who thought that, like, I don't know, parents in the 90s I thought were like, these Pokemon things, such a waste of time, but who knows? What's the Roaring Kitty line? Hey, like, what about that guy who made Pet Rocks? He made like $1 million. Crazy. April, maybe you will make $1 million on your Garbage Pail Kid stickers. Guido also has them. Hey, maybe we're sitting on a gold mine here. We didn't even know it. $1 million. Yeah, Ken puts this in a good way, right? PSA Vault is Pokemon card DRSing. That's exactly what that is. That's exactly what Larry just did, right? Larry just DRS'd his entire Pokemon collection. You can do that now. See, this is the thing. You can already do this. This is not, oh, we plan on doing this a year down the road. We're building an app. No, the app is built. The vault is in place. You can do this today. You and me, we can do this now. I might even do this when I get home. Like, I have that whole collection. Go scan that in. I'm going to try this out. Guys, what if USA Livestream, we can try to do some stuff with the, do you guys want to do that? We could do it live. I can go pick out my best cards. We can go do this live on the stream and see how the PSA app works. Do you guys want to do that? Say in the comment if you want to do that. Say if you think that's cool. I might do that. I'm going to do that on my own anyway. But if you guys want to see that on the stream, we can go check that out. Good question, Ken. They definitely do other cards. I don't know if they're going to do like all cards. Do they do, I don't know if they're doing baseball stuff. Pokemon's the most popular by far. I know they do Magic the Gathering cards. I would be surprised if they didn't do Yu-Gi-Oh! I have a bunch of Yu-Gi-Oh! Cards too. Oh, yeah. All right. April's in. That's two of us, so we may as well do it. You ever see the meme of like the dog on Facebook? Right? So the dog's like, okay. Or it's like a cat or something. It's like, okay, 1 like, and I will run around the house at midnight and scratch up your couch. And then the cat itself is the one that likes the post, and then the cat responds to his own post and goes, "Say no more." Me and April will look at my Pokemon cards on the PSA app next stream. Not next stream, 2 streams from now. That's a good question, Ken. I don't think they would buy PSA, but I could definitely see like a sort of like merger partnership thing, so they could deepen the partnership. Nat Turner's on the board of GameStop. Nat Turner's on the GameStop board. So, but he doesn't have a share in the company yet. So I would not be surprised if like there's some kind of deal where like GameStop takes a position in PSA and like you know, Nat Turner also buys like a portion of GameStop, or there's something like that. I could see that. Oh no, I would not say that PSA would buy GameStop. That would cost $20 billion, like too much money. May says, interesting, May. May says they also do the sports cards. That's pretty cool. So they're doing the whole thing, man. And what's interesting here is then like GameStop acts as like the front man, as like the point for, oh, it's actually so good, right? Because like the people who shop at GameStop are collectibles people. Like part of why they shop at GameStop in the first place is just a different class of collectibles. So it's people who, it's really closely overlapping markets. And so the partnership makes sense because, you know, PSA doesn't have, like PSA has always had to interact with like dealers, like they license dealers and graders and evaluators. But this way, like GameStop already has this well built out network of physical points, which then act as these spots where of inventory acquisition and trade facilitation. So PSA doesn't have to build all that out. And GameStop doesn't have to build a parallel evaluation infrastructure. They can rely on PSA's pre-existing expertise in evaluation, and they can offer that kind of logistics end to PSA's thing, and then PSA can offer the expertise service on the other side, which is great. Yeah, so GameStop does do other collectibles now, and they're also launching they're doing the retro stores. So I think the retro stores are probably also the retro stores are also like a vein of it's an avenue for that same approach. So what's very interesting is there's also been kind of partnership with Atari has been dangled, and maybe GameStop just buys Atari outright. It's not super expensive, or maybe they buy like a licensing thing from them. But maybe Atari becomes a company that, think about this, right? What if Atari just like runs all the GameStop retro stuff? The mod retro stuff is there, but then that can be a place for like your collectibles in terms of hardware, collectible merchandise that has to do with, yeah, like gaming nostalgia, stuff like that. Go there if you want to buy classic titles, and then you can just NFT all of that, right? You can tokenize all of that, blockchain all of that. So very interesting too. That's cool. That's like another cool potential. And then like, and then you just have a huge marketplace. Like you don't make these separate marketplaces. Then you have an NFT marketplace that's all sorts of collectibles. And so you're trading tickers that are collectibles. You're trading a ticker and you can tokenize it, right? It's tokenized, so you can divide it into shares, just like Bitcoin, right? You can buy partial Bitcoins or something like that. There you go, May. May doing our scouting out there. May is going to have to be one of our top reconnaissance agents for future streams here. But yeah, right? They grade the pop figurines. I was never into those, but I guess there are people who are. So, right, part of the idea here with all of these is like collectibles are the service that's offered is you make it liquid, right? So the more liquid you can make the market, the greater the amount of value you can bring into the market. That's why, right? That's why when we think about like, equities markets and stuff, we always think liquidity. You can bring in significant amounts more, you bring in extra value because the more liquid a market is, the lower the cost to participate, the lower the knowledge costs, and the lower the cost of entry for the market. So it's easier to get more value into it. So yeah, they can do something similar here. With other markets, they can create liquidity in markets that are hugely illiquid. Yeah, do something pretty cool. So in terms of catalysts, in terms of what we're looking at, I think we're coming up on like the 2 hour. Oh wow, already at 2.5 hours, guys. Wow, amazing. Yeah, I think that's that's kind of the main spiel there. That's what I think we're looking at down the road as far as the Archegos swaps. Maybe we got something the week of March 11th or 12th. IV dynamics are what they are, but I think what does seem to be hinted at as a potential upcoming catalyst as something really, really meaningful in terms of the company that sort of blows past the internalization stuff that can really trap some of these people who are trying to internalize orders and mess with the price and stuff. No matter what they do, like if you really rock this thing from the foundations by the fundamentals, that's really how you squeeze people out of this stuff. That's what happened with Ryan Cohen, right? That was the Ryan Cohen show in 2020 to 2021. What really squeezed GameStop out of this deep seller boxing thing was, yeah, okay, Burry recalled his shares and did some of that, and there was some stuff going on with market mechanics, but it was the Ryan Cohen show, man. It was the console cycle. it was the Ryan Cohen show, and the original play, right? The foundational play to kind of set all this in motion that Roaring Kitty talked about and was celebrating and cheersing and, you know, drinking champagne to on December 23rd. Like I said, I just went back and watched that live stream. Was the Ryan Cohen show and what happened. And so now is the time. Roaring Kitty's done his stuff again. He's done round 2. Last year, May, June, into the fall, National Cat Day, October 29th. That was the Roaring Kitty show. The Roaring Kitty show now, and this is, I think, what, is hinted. Richard Newton's talking about this with the Futurama tweet, is the Roaring Kitty portion of the show is done. Now we wait for the Ryan Cohen show again. And March 25th or 26th, whenever we get earnings, hey, he could also release it early too. There's nothing that says he has to do it on that day. Imagine that. Imagine the surprise to institutions if he releases it, like, I don't know, a week early. That'd be something, which he did in June. Yeah, it's the Ryan Cohen show. So that sums up what's really implied with the whole PSA stuff, with this catalyst, with the potential for the company, and with fundamentals as well. So I hope you guys all found that helpful. That's certainly what I'm looking for, is like what I think is going to come down the road in March, and then of course the aftermath of that, which will take place in April and May, as institutions scramble to try to control that fallout if that does take place. So eyes on the prize. That's certainly, yeah, a lot of stuff coming down the road, and it may be that what we've seen happen to the price in recent weeks has been an attempt to head that off as much as possible, ahead of, maybe what's already seen by inevitable with some of these guys. I don't know, but anyway, 2.5 hours, wonderful stream. I can't believe, guys, we made it to 600 people today. This is incredible. So awesome to see you all here. Maybe we have to do this time. Going forward, because it's so great to see all you guys. So great to get your questions. So great to get your comments. Really looking forward to, next stream. So we'll do this at 10 p.m. also next week. It'll be our last stream from Thailand. And then, we'll have some streams from the East Coast back again the week to follow. So, So in any case, thanks very much, you guys. We will see you soon. Have a great weekend, and we'll be back at this on Monday with our daily newsletter breakdown. So look forward to seeing you guys then. See y'all.